Hello, today is the 8th of June 2012, and let's take a look at the silver market as 9:30 a.m. approaches, and as you're watching that, it's obviously after that. So let's take a look. 3 consecutive weeks in which there were closes very close to the open, bringing the bullish hammer formation. Each one of them contained higher lows, significantly higher lows, and barely lower highs before. We started the week off by breaking this significant resistance point, and it managed to get up to the 18 period average of lower prices, and now it's turning into a negative hammer or a bearish hammer formation. So definitely showing as if it's looking as if this move that we'll see on the daily and 5-hour chart to be that of the failed breakout. You can see the failed breakout in here, right? This little quick little move here. Now that doesn't necessarily mean that that's going to be the breakout for it, the pattern of these lows that are higher. It's still in play, so obviously as long as it stays above, I would like to say 27.20 or 27.60, 27.70, but I'm really not liking the chances of it doing it. Now, when you look at this chart or any of these charts within this setup and tactical analysis, I look at it as if you're almost like that coyote or that wolf or lion that's looking to successfully take out the prey. And the prey is the charts. And you can obviously, there's multiple different charts. Each one is a prey. And you're just looking and looking, trying to find the right setups. And then when you find it, you go in, you make your attack. For example, as the price action was moving up to 30, then the situation there was to go short. Only problem was that it never did get to 30. So you're eyeing it, yep, you know what, the prey got away. Now in here, the prey didn't get away because you were able to get in at 30 and able to finish off your play at some point in here, thus at least successfully making your play at it, that type deal. Let's now move this on to the 5-hour chart and see the breakout just a little bit better. The first level of significant support was at the 28 2/3 level. That was an area that was resistance on several occasions, well, really 4. But it really didn't find any support, and this morning it bounced down towards the second Fibonacci support level at 27.93. Therefore, what we're seeing now from this point, it's another red candle, and breaking down below this, not too good. Now the trend line that connects the significant lows is, and I want to connect the second one, was hit perfectly. So I can even continue on further within this trend analysis. So therefore still in this upper range. But on the lower part of this, and then breaking down below this, which means that it's just staying below 28 for more than, I don't know, or for the rest of the day even, would not look good for the Monday open. And the problem within this, or the most likely scenario, is that you'd have a break of this band of previous support, test 26 and that 15 area, or really 26 even, we'll say. And it may be support in that area, but it may not. But what I would be looking for would be a move to 26 and then resistance to come somewhere within this band between the high 26s and the low to mid 27. So roughly between 26.75 and 27.40 as that area. So let's just assume that it does go down to 26 in the area, and then it bounces up to it here. And as it's pulling lower, that's the moment you'd be looking for the major break of the support level. We'll take that look on the weekly time frame one more time, where I move down to this level, a quick comeback up to here, and then when it breaks down below, that's most likely where the large capitulation type of move would generally come into play. So basically, this is your forewarning that there is the decent chance that over the next little while, this thing could have a pretty decent size capitulation move. Now, you always want to adjust to the message of the market as well, because what happens if we do rally further today? And assume that we rally up to 29, and you have this green candle with this little long stem, then all of a sudden I'll be stating that, okay, well, we did have come back within this range, because as long as it stays within this range, the correction from such, then that's still part of the correction, if you will. I was stating that going down was both bullish and bearish. Now, for it to be bullish, generally you'd want to find support right in this area here, and that wasn't the case. Now, that's generally speaking. Having a 61.8% retracement from here to here, well, that's still it's keeping this rally that occurred still to be successful. But if that's the case, it's obviously got to keep going higher. It's got to get by 61.8% from this high and this low. So we'll go back again to the 5-hour chart. So therefore, you got here to here. So 61.8% would be somewhere up around here. So if it does manage to come up and say it breaks above this area here, something like this, then I would be giving it a lot of credit that the bull market is going to come into play, which is only a matter of time before that takes place. But for now, the setups are not looking bullish. It's looking the complete opposite. It's looking very bearish as we head into the next following week. Thank you for tuning in.